Hi everyone, Gianni DePoce here with you for TheoTrade, and today is Tuesday, the 25th of March, 2025. We have less than a full week left of trading in the first quarter, and it's definitely been a turbulent one in the US market, much more turbulent than previous quarters we've seen. The big theme, of course, has been international stocks outperforming US stocks, but this week the script has flipped. We started off yesterday here in the S&P 500 with an impressive rally. Prices gapped up at the Sunday futures opening and continued their rally into yesterday's close. Today, unsurprisingly, the market has been pretty quiet so far. We have seen some selling over the course of this trading day at this point. But there are some good things and some bad things happening in this tape. The Nasdaq continues to lead, which is a good sign. We want to see that happen. But one of the things that I covered in deep depth today in Theo live session was how stocks are basically just retesting former support turned resistance. And we have broken to new lows. We made some new lower lows in the Nasdaq, especially. This has been the weakest index of the big three in the US, which is a problem. As someone that likes to trade momentum on the long side of this market, I like to see the Nasdaq outperform. I don't like seeing the Nasdaq peaking first. I don't like seeing the Nasdaq lead to the downside when it's breaking to new lows. But right now, all we're doing is just retesting this former support turned resistance zone. And if we go on to form a lower high here, it would, in theory, reinforce the short-term downtrend, and which means it would give the bears a little bit more firepower. But there are some cyclical factors at hand in this market. I'm going to be discussing that tomorrow in the Trinity Trade Masterclass at 4 p.m. Eastern. If you want to learn more about that, give our concierge team a call at 623-244-5657. And we're going to be discussing some of the cyclical circumstances of not just stocks, but other markets around the world. But to say that bulls have gotten the all clear at this point is very far from the truth. Now, over the last few weeks and even year to date now, we have seen XLE, the energy sector, emerge as the top performing sector in the S&P. Now, keep in mind that energy only represents around 2% of the S&P 500, so it's a very, very small percentage as a portion of the index. On its own, not enough to move the index. But this is where the momentum has been. But the problem is that if we're looking for a bottom in this market, if we're looking for a low that is going to stick in the long run, we shouldn't be seeing energy lead. We should see sectors like technology, okay, XLK, or semiconductors. Okay, semiconductors are down on the day. They had a good day yesterday, but we're still not seeing the right leadership from the right places. So that could change this week. We could see technology explode into Friday's close and semiconductors really start to come around. And I would start to change my tune at that point. But for now, in seeing XLE as the top performing sector year to date, over the last couple of weeks as well, that is not bullish in of itself for the overall market. And so what we've done is starting to look at some setups in the energy space. Okay, I've been looking at Comstock Resources. I am very intrigued with what's going on. And Chevron, haven't taken full positions in these yet, but they are on the radar. Even natural gas has had a pretty good run to start the year. It's been selling over the last couple of weeks. But you take a look at energy. One of the I think most remarkable things about what's happened in the energy sector is that it's running up against these, multi-year highs in many cases on these individual stocks, but the price of crude oil has done almost nothing. It's done almost nothing now. Going, it's been over 3 years since 2022, really, and it's just been in a very narrow range-bound market. And I think we're in a sweet spot from that regard for the overall economy. A lot of people are in the recession camp right now, but I have a tough time being in the recession camp with copper breaking out to new all-time highs. We could be in a situation where the economy slows from 2 or 3% growth down to a 0.5%, but that's a lot different from going into a recession. So I seem to be in that camp at the moment. And if we are heading into a recession, that tells me stimulus. That tells me the Fed's going to be easing. QT is coming to an end. We're going to see rates being cut probably as soon as as June again. And, you are seeing bonds start to come back here. I think that we could be uh, due for a little bit more sideways price action here in the bond market. But what this rally on the long end of the yield curve is doing, remember, there's interest rates for different time frames in the market. But the more that long-term bonds rally, specifically ZB, which is the 30-year Treasury bond, the more it's going to force the Fed's hand to lower rates in the short term, because that's what's going to prevent the yield curve from inverting again. It's close to doing so across some different measurements, but this is what I think is going to happen. Now, interest rates coming down probably will be good for real estate, probably will be good for stocks. The dollar could continue to drop, and in that case, we'd be looking at the bull trend in precious metals to continue. Okay, silver seeing a strong rally today, up over 2%. Our positions in Agnico Eagle Mines up over, well, I guess just under 2% now. AGI very strong, up almost 3% on the day, hitting a new all-time high. So these are positions we've taken in the live room. Some of the ones that we've been trading in the Trinity trade include Anglo Gold Ashanti. Okay, that one's been very strong, hitting new highs. So there are things working still. And part of this copper breakout story has to do with China, and we've been very bullish China year to date. It's been coming back down. We're actually seeing a situation where, like I said at the beginning of this video, US is finally outperforming international stocks for the first time in a while. But a lot of these setups in Chinese names look pretty good. BYD, Tesla's competitor. I still like what's happening in that one. Alibaba has still been pretty good to us so far. Tencent still looking pretty good. So these are all stocks that seem to be consolidating their gains versus turning the trend bearish. And I think that's something we should continue to monitor. But, back here in the US, we did put on a swing trade in Tesla last week, and it's really starting to move in the right direction for us. And so, we did get in last Wednesday, that secondary retest for the low. And then last Friday, we actually picked up a position in Amazon, and this one has started off the week on a strong note. So, there are things still working, but going back to what I need to see happen in the US here, it's not so much a Magnificent Seven story. That's fine. For me, it's more about semiconductors. Semiconductors, the index itself hasn't hit a new all-time high since July of last year. And if we start to see names like NVIDIA, running into the upside, we do have a swing long position open on advanced micro devices that has been treating us very well. Then we could start to talk about the market bottoming. But the point I want to make is that I still have cash in the portfolio. I'm still sitting around 15 to 20% cash, and I'm trading very lightly, very nimbly right now. But if we start to see some of these tech moves really take hold in the US, it could change the tune very quickly, and we would have to flip back to bullish. But I'm not ready to jump the gun on that. There's still plenty of time left before we have to make that judgment call. So in the meantime, I think caution is going to reward you, and patience above all else. I do want to take a look at cryptocurrencies here. I am watching some developments and setups in this space. Bitcoin continues to struggle with the resistance zone at 88 to 90,000. And I would say it's no coincidence that you're seeing both stocks and crypto test key important former support turn resistance zones, because if we form another lower high here in Bitcoin, we cannot dismiss the possibility that a drop to $70,000 to $72,000 is on its way. But I'll tell you what, we clear 88 to 90,000 in Bitcoin. That's going to send a really strong message that the appetite for risk has returned in the US, and we would be foolish to not be bullish. When it comes to Ethereum, the $2,100, $2,400 area is key. But there's no shortage of ways to get some exposure in individual stocks. Names like Coinbase, Hut 8 Mining, these are ones to watch. IREN, okay, we're not out of the woods yet. There still could be a lot more downside. But again, I cannot stress enough. Bitcoin clears 88, 90,000. Look out above, because this thing's probably going to squeeze back higher. So that's what I'm watching in this market right now. If you are still concerned about the volatility in this tape. Okay, the VIX is down right now, but we know that can change quickly also. Don Kaufman is doing a 4-week short mastermind on volatility and how to trade volatility. So definitely check that out. Again, our support desk is 623-244-5657. Give them a call and ask them if Don's volatility course is good for you in this environment. So that's all I had for now, everyone. Thank you so much for watching, and we'll be back live in the TheoTrade chat room tomorrow. Take care.